The Indian rupee, auras, symbolized as INR in international markets, has undergone significant transformations throughout its history. From its ancient origins to its current status in the global economy, the evolution of the Indian rupee reflects the broader economic, political, and social changes in India. This essay explores the journey of the Indian rupee, examining its historical background, the impact of colonization, post-independence reforms, and its role in the contemporary global economy. Historical background. The history of the Indian rupee can be traced back to ancient India, where trade was conducted using a variety of coins. The term rupee is derived from the Sanskrit word rupiah, meaning wrought silver, or a coin of silver. The first known use of the term dates back to the 6th century BCE, during the reign of the Mahajanapadas, a confederation of states in northern India. The Mughal period. The transformation of the rupee into a standardized currency began during the Mughal Empire. In the 16th century, Emperor Shah Suri introduced a silver coin known as the rupiah, which weighed 178 grains, 11.53 grams. This coin became the precursor to the modern Indian rupee. The Mughal rupiah was widely accepted across the Indian subcontinent and established a uniform currency system, which facilitated trade and commerce. British colonial era. The next significant transformation of the Indian rupee occurred during British colonial rule. The British East India Company initially issued coins that coexisted with local currencies. However, in 1835, the British introduced the uniform coinage system, which standardized the rupee across all territories under British control. The silver-based Indian rupee became the official currency, replacing various local currencies. The introduction of the paper rupee in 1861 marked another pivotal moment. The Paper Currency Act of 1861 allowed the government to issue currency notes, which were initially printed by the Bank of Bengal, Bank of Bombay, and Bank of Madras. This move laid the foundation for the modern banking system in India. Post-independence reforms. India gained independence from British rule in 1947, and with it came significant economic and monetary reforms. The Reserve Bank of India, RBI, established in 1935, became the central authority responsible for managing the country's currency and monetary policy. The RBI introduced the new Indian rupee, which replaced the British Indian rupee. The early post-independence years saw a series of economic challenges, including food shortages, inflation, and the need for industrialization. In response, the Indian government implemented a series of 5-year plans aimed at economic development. The rupee underwent several devaluations during this period to address economic imbalances and promote exports. Modern-day Indian rupee. Today, the Indian rupee is a vital player in the global economy. It is managed by the RBI, which regulates its supply, monitors inflation, and ensures financial stability. The rupee is available in various denominations, from coins 1, 2, 5, and 10 rupees, to banknotes 10, 20, 50, 100, 200, 500, and 2,000 rupees. The advent of digital technology has also impacted the Indian rupee. The government's push for a digital economy, exemplified by initiatives like the Unified Payments Interface, UPI, and the demonetization of high-value currency notes in 2016, has led to an increase in digital transactions. The UPI, in particular, has revolutionized the way money is transferred in India, making digital payments seamless and accessible. Challenges and future prospects. Despite its progress, the Indian rupee faces several challenges. Inflation, fluctuating oil prices, and external factors like global economic conditions can impact its value. Additionally, managing the balance between economic growth and inflation remains a critical task for policymakers. The future of the Indian rupee is intertwined with India's economic trajectory, as the country aims to become a $5 trillion economy. Maintaining currency stability, promoting exports, and attracting foreign investment will be crucial. Moreover, integrating the rupee into the global financial system, increasing its usage in international trade, and reducing dependency on the US dollar are essential steps for its future transformation. Conclusion. The transformation of the Indian rupee from ancient coinage to a modern currency is a testament to India's economic evolution. Each phase of its history, from the Mughal period to British colonization and post-independence reforms, has shaped the rupee into what it is today. As India continues to grow and integrate into the global economy, the rupee's role will undoubtedly expand, reflecting the dynamic and resilient nature of the Indian economy.